With the changing market, these are the places you should be looking at to put your money, and this is why. I'm Jillian Sidoti.
And I'm Nate Dodson, and today we're going to talk about directions and actually some standard directions to consider where to invest your money, the changes of inflation rates, financial markets, and interesting things happening in the world generally. I'm going to take the other approach of it's very positive that the Treasury Department is reducing the rate of them increasing interest rates. We knew that was going to keep happening. They're finally saying, oh, look, it's actually inflation has decreased about 15% from the last time we looked at the year to year. A month or two ago, it was 8.5% to 9% year over year inflation. Their latest numbers is it only came in at 7.1%.
Yeah.
Fantastic. It's a move in the right direction, but it's not hitting our target yet. And whether or not the Treasury just continuing to increase their inflation rates or their interest rates will temper inflation to the point that they don't have to do anything else, actually doubt that's going to happen, because it's not just the interest rates that are causing all this inflation at this point, but it's the things to take into account. And so it's like you can say they continue to raise the interest rates. That's showing that things are horrible. And I'm just saying, well, let's look at it a different way. And it's actually things starting to slowly move in the right direction.
Oh, I hope so. Oh my God. I got to show you this. I got to show you this picture because I don't think listen, all right, everybody, I live in Puerto Rico and things are a little different here. And I used to live in California. And when I lived in California, things were expensive. Things in California tend to be more expensive than other parts of the country. But I live here in Puerto Rico and things are ridiculously expensive here. They're almost 3 times often what we would pay in California, except for gas, because California has so much in gas tax. I will say gas is cheaper here. But this, you see that number? It says $16.19. It's backwards for you, but it says $16.19. That was for 3 heads of romaine lettuce. That is the real price of 3 heads of romaine lettuce here in Puerto Rico. Yeah, inflation is terrible. Eggs around these parts are $7 a dozen right now. We're seeing some really terrible inflationary things happen here. Inflation has not slowed down. I feel terrible. I'm a well-off woman. I'm doing okay. I don't have any problems, right? I don't sleep at night because I worry about what other people are doing. Fortunately, we have a really strong food stamps program here, so nobody's really going hungry per se. It's a struggle.
Kind of struggling a little bit.
Inflation has not slowed down. I do worry about some of these real estate investors who are buying properties and they bought them with adjustable rate mortgages and didn't buy interest rate caps.
And that's kind of a big area of discussion right now is so many people have got into 3-year bridge loans. Mm-hmm. And those 3-year bridge loans are starting to come up this year more and more. And for anybody that's invested that needs a refi, that now the interest rates are doubling. Carriage costs are doubling. It's a different analysis entirely. Again, horrible for people that have been invested. It's going to create some amazing opportunities for people to invest.
Yeah. Oh yeah, you guys all need to be ready. I mean, and you can listen to our opinion all day long on what we think of how terrible things are and where they're going and why I like chaos and Nate likes order. But at the end of the day, if everything is going to hell in the handbasket as has been predicted for the last year, right? And seems to be actually
predicted the last 10 years.
Right. But what can you do? I'm going to give you 3 things I think you should invest in the next couple of years. Number 1, bank notes, like mortgage notes. Research mortgage notes. How can you buy them? Where can you buy them? How can you get your hands on them? Mortgage notes are going to be a great way to acquire properties or just get a note at a discount and rehab the note itself. There's a couple different things you can do with notes that I've done myself. You can get notes to then acquire the property, or you can get a note and get it at a significant discount, because there's FDIC rules that banks can't have so many assets on their books. So they can't actually foreclose sometimes. So they want to get those notes off their books. So you can buy the note. And then when you buy the note, because you're going to get it at such a significant discount, you can save that home for that homeowner, right? If you so choose. And if it works for the homeowner as well. But let's just say the homeowner can't afford the payment anymore and you buy the note at a significant discount, you can still make money and lower that homeowner's payment every month. And that's one great way of profiting in the next recession, which sounds like we're on the precipice of. Tax liens, people don't pay their property taxes. You can go out and buy a tax lien from a county. Oftentimes they're held by counties, and there's different states. You can research that. And third thing, honestly, I think a third thing is just going to be real estate in general. There's going to still be some great opportunities in the real estate space. People still need places to live, and there's still going to be value add opportunities in certain locations.
So I'm going to take a lot of what you just said and expand on it, because I've got my own opinions of the top 3 places to be paying attention to investing right now. My number 1 is still in real estate.
Yeah.
There's where diamond in the rough, and it's still there. In fact, more diamonds will continue to show up if the interest rates keep going up. If the expenses keep going up, it's going to create that opportunity. And even if you're not making a whole lot now, eventually those interest rates are going to come down, values go up, you refi at the lower rates. So you're positioning yourself now for the future. My second area that I recommend people, I think is a great place to be. I don't recommend anything, financial advice, but we don't talk enough about just the stock market. It has taken a beating, and people don't really realize why the stocks market goes down. Well, it's because the operating costs of a lot of the underlying businesses cost more, so they're less profitable. They borrow money. Now they're borrowing money at higher rates. So it doesn't make the companies necessarily look as good. But you got to pay attention to the massive difference of the money supply has quadrupled over the past few years. And so at some point, all of that comes back to an equilibrium. And if everything was as it was in 2017, the stock market would be 4 times more, because the money supply has gone up 4 times as much too. So I still think it's an awesome opportunity to look into and invest in the stock market.
What do you like, the S&P? You just invest in, not financial advice, right? But what would you say? Like just the S&P? Don't give stock picks because I don't want to get in any trouble. But I guess you could just put some money on the S&P 500, right?
And the no-load index investments.
Oh, okay.
Where you're looking at the indexes, you're looking at the S&Ps, you're investing into the stock market in general, rather than having to pick the winners and the losers, which after everything that we've gone through over the past year or two, specifically Dodson, and some of the shenanigans that we've all seen go on with the stock market, I wouldn't suggest anybody dive in and figure out the winners or the losers, because it's almost impossible. Right. With some of the dark money pools playing around behind the scenes. I'm still a big believer in America. And I still think that the stock market is a great place to be, as long as you don't try to beat the markets at the market maker's game. And then number 3, which ties in with both real estate and the stock market, money is fleeting. So money has been going from the stock market to real estate, but not through the way that we've normally been investing. So money is going to the real estate as well as to other investments that are going into debt, going into buying the promissory notes, where when the hard money loans were at 6%, and now it's at 8, 9, 10%, if not more. Investing in those and have a fixed rate, prioritized rate, compared to taking the risk on the equities, still think there's a phenomenal opportunity to do exactly as the big boys in Wall Street did, taking their chips off of the equity markets and bringing it into the debt markets, investing into the real estate loans, other types of performing and non-performing debt. All of a sudden, you're getting great returns with that same risk of investment. So related, but a little bit different than the other two.
No, I think it's great. And I hope we gave you guys all kinds of great advice that you can act on. We're going to do some more episodes. We'll dive deeper into those things and what you could do. Maybe not the stock market one, Nate. Maybe we'll
leave that one alone.
Yeah. Go to a financial advisor on that one. But all the other things, we're going to dive into those deeper on future episodes. And thank you so much. I'm Jillian Sidoti.
I'm Nate Dodson. And this is fun.